Back to our top story now. The Bank of Canada has cut interest rates for a third consecutive time. The bank's main policy rate is now at 4.25%. So what does this move actually mean for all of us? Let's bring Melissa Leong. She is the author of the book Happy Go Money, a finance guide. Melissa, good to have you on the show.
Thanks for having me, Natasha.
So, Melissa, break it down for us. We heard from the governor today, we got the announcement, but what does this interest rate cut mean for Canadians?
I, as a regular citizen of this country, I was very pleased. We were expecting this movement, this downward trend. I'm relieved. I am a variable rate mortgage holder. The majority of Canadians have fixed mortgages, but the people who will feel it most are those with variable rate mortgages. So a little bit of math. So for every 100K of a variable rate mortgage, a 25 basis point rate reduces your monthly rent by about $15. So it doesn't seem like a lot in this moment, but economists have been predicting that by end of next year, we're hoping to get to 3 to 4%, which makes a difference. I mean, we've all been feeling at the grocery stores. We've all been feeling with rising costs and increasing debt in this country. And so every little bit helps. I'm relieved. I like it.
Amen to that. I'm glad you like it. I'm glad we covered the big thing, which is the variable mortgage concern for so many homeowners or potential homeowners. But let's talk about credit cards with high interest rates. So what does that mean for that?
So credit cards aren't typically they're not affected when there is a rate cut announcement. I mean, usually they have fixed rates. You're looking at 19.99% in terms of your interest rate. But what I will say is that a lower cost in other kinds of debts in your variable rate mortgages will hopefully give you some extra money to be able to tackle some of those credit card debts that are getting out of control these days.
What advice do you have then in terms of these other options for people who are dealing with their mortgage loads or they're just not able to pay their bills?
I have so much empathy. I talk to people every day about how much we are struggling and trying to make ends meet. A lot of my friends who are parents say that money is their number one worry and stressor. And so I always just say sometimes you're afraid to turn on the lights and look at something because it feels stressful, it feels overwhelming. But I promise you, if you are feeling overwhelmed, please be brave and take a look. Take a look at your money. Take a look at how much money is coming in, how much money exactly is going out, and to where. You're getting extreme clarity on your financial situation, including your debts and how much you're paying to your debts and what the interest rates are associated with those debts. I promise you, knowing it's not going to be as bad as you think it is, and then that way you can take steps to move the needle in terms of improving your financial life.
Well, in that effort to improve your financial life, a lot of people think about refinancing their mortgage. So that might be an option for some people, but it does come with a cost. What other avenues do mortgage holders have to keep their monthly payments lower?
If you have wiggle room right now to look at your monthly payments, you can, if you are stretched, there are things you can do. You can call your bank and talk to them about your situation. You can lengthen the amortization, for example, which will lower your payments. For example, if you are really in a tough space, you can talk to your bank about some sort of relief. I know in the past, I've had friends who tried to say, you know what, I'm having a rough time right now. Is there anything we can do about interest rates for this moment? It's a personal thing that you need to go and be proactive about talking to your lender about what kinds of options are available to you. If you have the opposite, if you actually have some space, if you have wiggle room now and you say, you know what, I want to actually tackle my mortgage, you can look at your contract for options to actually reduce your principal faster. So the part where you would look at extra payments maybe that you could perhaps make, or topping up, or maybe lump sum payments. If you have more room, if you have more money, please put that money to a new goal. Otherwise, it sort of just gets eaten up with the rest of your spending day to day.
And before I let you go, we've emphasized that this is good news for a whole lot of people, yourself included. But who stands to lose from this mortgage rate cut? I'm thinking specifically about seniors.
Seniors, it's always difficult, especially with the fixed income, especially with your investments. I would say, though, that people who are shopping, I did want to emphasize that my sister is shopping for a fixed rate mortgage, and she asked me, what should I be doing right now? And 2 weeks ago, mortgages, she wasn't sure if the rates were going to come down. But then last week, rates did come down. There were some fixed rate lenders who gave some better options. And so I don't have a crystal ball. We don't know what's going to happen. We can't guess. We can only just look at our own financial situation right now and what you are capable of handling. And then looking at, okay, what could possibly happen? Can I handle this currently? Can I handle a 25% increase? Can I handle a 1% increase or a drop? What will happen if this happens? So make sure that you have plan Bs. And for seniors, that's what I recommend as well. Just looking at the money, looking at the numbers. The numbers will give you more comfort, more freedom, and trying to understand what will happen in different scenarios. That's how we sort of shock-proof our finances.
Okay, Melissa Leong, thank you so much for your time.
Thank you so much.